Hey everyone, it is Julie here with TipRanks, and today we're taking a look at three big name stocks that top analysts just increased their price targets on. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're taking a look at three big names in the tech sector. Not only have they had analysts reiterating their buy ratings lately, we've also had five-star analysts increase their price targets on the stocks. So today, we're going to take a look at these stocks, what's been going on with them lately, and what these analysts are predicting for their future. We found these companies today looking at the TipRanks Daily Analyst Ratings page. Found right under the Tools menu, here you can see the latest ratings from Wall Street analysts. I wanted to focus in on five-star analysts who rated a stock a buy with some double-digit upside potential, and I narrowed it down to some larger market cap companies. Then from our list, we found several that had increased price targets. Just before we jump into these three stocks, this is your friendly reminder that if you enjoyed today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. You can download the TipRanks mobile app following links in the description down below so you can stay up to date with all the latest stock news and access your favorite investment research tools on the go. Now let's get right into our three tech stocks. We're going to kick things off with Advanced Micro Devices. The semiconductor company trades under the ticker AMD, currently priced at $182 per share. They've climbed 53.5% over the past year, and in the last 3 months have climbed 11%. They do currently score a 9 out of 10 on the TipRanks Smart Score. AMD recently made headlines after the company dropped $665 million to purchase Silo AI. Silo AI considers itself the largest private AI lab in Europe and has a range of high-end clients to its credit that will now be, by extension, AMD's clients. This will give them an access to a range of AI models that will hopefully help them close the gap with their competitors in this field. The transaction is expected to close in the second half of 2024. AMD is scheduled to share their Q2 earnings report in just a couple of weeks on July 30th, and this does follow a Q1 earnings beat. For their second quarter, analysts are anticipating earnings per share of 67 cents, which would be 9 cents higher than last year's. This follows their Q1, where they reported earnings per share of 62 cents, in line with expectations. The company saw their revenue come in at $5.5 billion, with their data center and client segments each growing more than 80% year over year. For their second quarter, they're expecting revenue to be approximately $5.7 billion plus or minus $300 million, and at the midpoint of this range, this will be year-over-year growth of about 6%. In just the past week, we've had 4 analysts all increase their price targets on the AMD stock. One of those was a 5-star analyst at Citi. They bumped their price target up to $210 from $176, saying they expect the Q2 earnings season to be a positive catalyst for the semiconductor space, with aggregate estimates moving higher, driven by AI strength, stabilization in the PC, wireless, and data center end markets, along with better prints and guides from analog companies. While valuations are high, the sector can continue to move higher. Their price target of $210 would imply an upside potential of over 15%. Also increasing their price target to $210 was a 5-star analyst from TD Cowen. They acknowledged that while market sentiment has fluctuated, the fundamentals of AMD, particularly in the data center segment, have remained robust and are poised for significant growth in the latter half of 2024 and into 2025. He is optimistic about the company's prospects, citing potential upside in their core server sales, the promising growth trajectory of their M1300/325 products, and a favorable near-term outlook for the PC market. Overall, the AMD stock does come in as a strong buy. It currently has 36 analyst ratings with 29 buys and 7 holds. The average price target comes in at $193 per share for an upside of over 6%, and we do have a decent range of price targets with a low end of $140 and a high end of $235. Looking at our most recent ratings here, we can see the 4 analysts that all increased their price target, one all the way up to an upside of 21%, while our more recent low end price target is that downside of nearly 23%. Our second big name tech stock with recent price target increases is none other than Apple. They trade under the ticker AAPL, currently priced at $235 per share. In the past year, they've climbed over 19%, gaining 36% in just the last 3 months, and the Apple stock has actually been hitting all-time highs just today, breaking a market cap of $3.6 trillion. Just today, Bloomberg reported that Apple's sales in India increased 33% to nearly $8 billion. And that was up from $4.1 billion in March of 2022. They said that iPhones make up 50% of those sales. Apple has had a handful of analysts increasing their price targets on the stock. That includes one 5-star analyst from Loop Capital. They actually upgraded their rating from a hold to a buy, increasing their price target from $170 all the way up to $300. The firm's supply chain work suggests that Apple has an opportunity the next few years to solidify itself as consumers' generative AI base camp of choice, just as they did for social media 15 years ago with the iPhone and digital content consumption 20 years ago with the iPod. Each of those trends were material stock catalysts, and the basic math suggests that generative AI has the opportunity to be the same. We also just had an analyst at Morgan Stanley increase their price target, and they replaced Dell Technologies with Apple, saying it was their top pick for enterprise hardware. They said that Apple Intelligence is a clear catalyst to boost iPhone and iPad shipments, and that their analysis into the iPhone installed base, upgrade rates, and mix shift now point to a record cycle ahead. They said that Apple Intelligence is a clear catalyst for a multi-year product upgrade cycle. The Apple stock does come in as a moderate buy. They have 35 current analyst ratings, breaking down to 25 buys, 9 holds, and even 1 sell. The average price target comes in at $230, which would actually be a slight downside of 2%. Once again, we have a wide range of price targets here. Looking at the most recent, we have several with some pretty bullish outlook, including a high-end price target here with 27% upside, but we also have this sell rating here from Barclays just from a few days ago with a downside of 30%, so some pretty big differences. As we scroll back through the older ratings, we'll even see some buy ratings with downsides as the stock has already surpassed those price targets. And our third stock with recently increased price targets is streaming giant Netflix. Trading under the ticker NFLX, they're currently priced at $656. They've climbed nearly 44% over the past year, gaining nearly 5% in the last 3 months, currently scoring an 8 out of 10 on the TipRanks Smart Score. The Netflix stock is gaining attention as their Q2 earnings report is due out in just a few days, coming out in the after hours of July 18th. For their second quarter, analysts are anticipating earnings per share of $4.74, which would be a big increase compared to last year's. This does follow their Q1 report back in April, where they had a solid earnings beat of $5.28 compared to the $4.52 expected. Revenue came in at $9.37 billion, growing 15% year over year. Looking forward for their second quarter, they're forecasting revenue growth of 16%. So we have several analysts weighing in on the stock ahead of this earnings report, including a 5-star analyst from Morgan Stanley, who bumped up their price target to $780, which is just $20 shy of the street high. They expect continued strong results from Netflix heading into the second half of the year, raising their estimates and seeing a path to their $950 bull case by year-end of 2025. When looking toward that 2025 growth, the firm expects advertising will increase in import to deliver on top-line and margin expansion expectations. Another recent price target increase came from Bank of America. The firm noted third-party data sources indicating healthy subscriber acquisition trends, greater appreciation for the company's enviable market position, and optimism around the potential in advertising. These dynamics support a bullish thesis for Netflix's longer-term potential, which will be driven by healthy revenue growth, continued margin expansion, and outsized free cash flow growth over the next several years. The Netflix stock does also come in as a moderate buy with 35 current analyst ratings, breaking down to 23 buys, 12 holds, and 1 sell. Once again, we do have a wide range of price targets from $450 to $800, with the average coming in at $668 for a fairly flat price target. Looking recently here, we've had 5 analysts increase their price target, even though one was on a hold with a downside of 14%. Our recent high end here is that $780 from Morgan Stanley with an upside of nearly 19%. Looking down below, a lot of mixed opinions back in May, so we'll see how they weigh in following this report. So there we have 3 big tech stocks, all with some increased price targets from analysts lately. Let me know your thoughts on these companies and whether you agree with those analysts or not. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those analysts are looking at. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.